Welcome back. Well, still weak for the markets. We have the mid-cap index, which is down around 1% odd. While the mid-cap index is down on a week-to-date basis, it is the small-cap index which has managed to still hold its head above the water. So it's up around half odd percent on a week-to-date basis. Let's see whether that reverses. But as of now, there's a tad bit of an outperformance which has come in. But nonetheless, let's talk about a couple of companies. Aarti Drugs is one company that we're tracking. It reported what was a mixed set of Q2 FY24 numbers. The company has reported a dip in revenue but managed to improve their margins. In the previous interaction, the company said EBITDA margins will be in the range of 14.5% to 15% in second half of FY24. To discuss this and more, we have with us Adhish Patil, who is the CFO at Aarti Drugs. Mr. Patel, thank you very much for joining in. If you could then start with the margin outlook, because you've done around 12% in terms of margins this year, this quarter. It has improved on a year-on-year basis. But are you in a position to reach that 14 to 15% mark in the second half?
Yeah, so the thing is, one new factor which has come up in last particular quarter was the lack of performance by export segment. And that was something new to us. And that had been a major drag for the numbers in September quarter. So we think that still, because of the geopolitical tensions right now, we feel that we have to revise down that estimate to at least 13 odd percent. But if the exports pick up well, if this geopolitical tension goes away, and then probably 14% can be on cards.
So 13%, you've revised your margin guidance down to 13%, and if things improve, they can go up to 14%. Adhish, just wanted your thoughts on the capex that you've been incurring, close to around 250 to 350 crores for this year itself. By the end of the second quarter, you had your dermatology and backward integration coming in as well. How much will that support your business in the second half of this year? And at peak utilization, what's the kind of revenue that you can do?
Yeah, so the dermatology project that will get operationalized by the end of December of this current quarter, whereas the backward integration is slightly delayed by a couple of months. So probably in the month of February, we might start with the water trials and then the commercial operations. So from dermatology in Q4, we might get a bit of revenue. But majorly, the revenues will start coming in FY25 from both these projects. Probably we are expecting a capacity utilization of around 1/3 for the next year. And the
so what does that?
Yeah. So the full potential from this project, once all these greenfield projects are done, would be around 1,000 crores. So it can take the standalone revenues of the company till 4,000 and plus the formulation around 500. So our peak potential might reach at 4,500 crores, inclusive of formulations.
Okay, got that. I want to talk a little more about the balance sheet as well. Adhish, your net debt is around 600 crores for the company. What is the plan to bring it down, and how much can you bring it down by over the next 1 year?
Okay. So we just did a big buyback, almost a cash outflow of around 73 to 74 crores in last quarter. So in spite of that, we were able to manage that debt to equity ratio at 0.49 on consolidated basis. Around 44% of the debt is term debt and the rest is working capital. There is little room of improvement in the working capital by reducing the inventory days. Otherwise, I think the debt number may not go down, but the overall size of the P&L size and the balance sheet of the company will go up. So we will be able to maintain that debt to equity ratio below 0.7 even after taking term debt for the newer expansion. And that is also at a peak level. And then slowly it will again come down to 0.5.
What's happening to demand, Adhish? Because earlier you had a revenue growth target of around 10 odd percent, which you had indicated to us, volume growth of around 15 to 20%. But if I look at your revenues for the first half, they're absolutely flat, and there was a decline that took place in Q2 as well on a year-on-year basis. Are you also revising your revenue guidance downwards? And why was there a decline this quarter?
Okay. So we had a volume growth of composite volume growth of 10%, even in September quarter, and around 15% in June quarter. But yet the value degrowth, the selling prices had gone down so much. If we compare year on year, just the September quarter, then it is almost minus 16%, by which the selling prices have gone down. And that is the reason why our overall value growth is minus 6%, minus 6.5%. So which was expected, but we did not expect it to go down so fast. However, for the second half of the current financial year, if we compare the base quarter, that is December 22, that time already some correction had happened. And in the March 23 quarter, even further correction had happened. So now the negative rate variance would go down in the second half of the year. So overall, definitely we'll like to revise down our growth estimates. So probably on the value basis, it might be between 5 and 8% for the entire year.
Okay, so 5 to 8% in terms of growth is what you're anticipating, and this is versus 10% that was targeted earlier. Just before we wrap up, a couple of weeks ago, there was news about the Directorate General of Trade Remedies terminating the anti-dumping investigation into the antibiotic metronidazole imports from China. That would probably impact your company. What is the status of that particular, termination of anti-dumping investigation and the reason for it?
Yes. So the thing is, by September 8, we had got one draft notification from the department, and that was quite positive towards levying the anti-dumping duty. And just 10 days later, there was a notification which was the other way around, that they had terminated the investigation. So we are in the process of talking to the department. However, currently, last 2 years, the anti-dumping duty is not there for metronidazole. And so the business and the margins will continue as is basis. So if the duty was levied, it would have improved the margins further. But as of now, there won't be any decline in the margins because it was rejected.
Okay, all right. We will thank you on that note, Adhish. Thanks a lot for joining in and speaking to us about Aarti Drugs. Let's slip into a short break on that note. On the other side of the break, we will get talking about the commodity markets. Manisha Gupta will join in. Surendra Mehta, the Secretary at India Bullion and Jewelers Association, will be with us. Stay tuned.